September is historically a rough month for stocks, the S&P 500 and Toronto. Our guest has more on this. He's been looking at seasonal investing for quite a while. We're joined by Brooke Thackray, research analyst at Global X. Great to see you, Brooke.
Thank you.
So just remind us, the S&P 500, I think you've numbers for it in September, but a lot of this applies to Canada too.
Yeah, absolutely. September just tends to be weak broadly for most stock markets around the world. And, you know, that's the seasonality. It doesn't always mean that the market's going to go down. That's important to realize that it doesn't mean it's going to always go down. So if we go back to, let's say, for 1990 to current date, 2024, the S&P 500 has been down 0.8%. And it's only been positive 49%. So it still can go up, but it just tends to be weaker.
So, sorry, it's been positive half the time, roughly?
About approximately half the time.
Right.
Yeah, exactly.
But if you average it out, it's a losing month.
It's a losing month. In fact, since 1950, since 1990, over the last 20 years, over the last 10 years, it's been the worst month of the year. When bad things happen, they tend to happen in September, basically.
Why is that? Can you postulate a reason?
Sure, yeah, of course. There's a couple of reasons. First of all, if you take a look, a lot of investors take the summer off a little bit, pull back on their risk, and then they come back and they go, hey, this is a get real month. I have to clean up my portfolio, start to sell off a little bit to cover some of the debts, et cetera. Also, the analysts, if you take a look, they set their expectations for the year at the beginning of the year. And on a yearly forecast, they're always optimistic, overly optimistic, and they have to start ratcheting back their expectations. And they tend to do that around this time as we move into fall. So that tends to drive the market down. And the other thing that affects the month of September, now, I want to say September being weak, it's really the second half of the month.
Oh.
And there's a reason for that, and that is that's the blackout period for stock buybacks. So stock buybacks, companies can't buy back their shares, according to the SEC, the last 2 weeks before the end of the fiscal quarter and until 48 hours after they've released their earnings.
Oh.
So some companies are more strict, but you can't get any loose in that. So buybacks have been a record. They've been going through the roof from companies. So that comes out of the market. So this has been a huge driver of pushing share prices higher. So that's not going to be an impact, and it tends to help pull prices down in the last couple of weeks in September. And the last 2 weeks in September, on average, are the worst 2 weeks of the year.
Ron, you're not an in-and-out trader, I know, in the markets, but does seasonal investing, is it on your radar at all?
Well, as someone who's desperately hoping for some downside of any sort.
Why do you say that? You think stocks are inflated, you mean? Or?
Yeah, again, as a long-term investor, your best buys are when things are bad, not when things are good. And so when you're trying to make compounded annual returns for people, the lower you can purchase, the better off you are. And we have a lot of new clients that have come in recently, and so looking for an opportunity to deploy some of that cash. And the hard thing, what's interesting about you saying the second half of the month is that we're in a very policy-driven world, and the leader of the free world is calling for a rate cut that we maybe don't need in the second half of this month, which I hope we're right. But what is there anything in your strategy that accounts for that, or you have to stay just completely by the numbers?
Well, I mean, so there are some adjustments based upon technicals and say, look, this is what's happening, so we can make some adjustments. But we'll take a look at it from a seasonal point of view as a first screen overall. And I mean, there are some changes. You know, the Federal Reserve coming up with this rate cut on the 17th, which would be the beginning of the second half of the month as far as that goes. But the thing is, even let's talk about the federal rate cut for a second. Sometimes the market goes down on that news, because all of a sudden it's like, it doesn't cause the market to go down, but it changes the narrative, because all of a sudden investors go, oh, why are we cutting rates? Because things are perhaps bad. That's why. And so the narrative changes. And the market often goes down when the Fed cuts.
Or we've already paid for this one. When's the next one coming?
That's right. Exactly. And
I wonder, I'll fire up Grok later and see if it can calculate. If you were out of the market for September, if you sold all your stocks at the end of August and only bought back in at the start of October over 10 years, would you have beaten the index?
Actually, if you just do based upon averages as far as that goes, because it's an arithmetic average versus geometric, so you're asking for a geometric mean, which is a little bit different, but you would be better off over the last 10 years if September has been average. But I don't think that's a good strategy to be able to say, hey, I'm going to sell all my stuff at the beginning or the end of August and then go back in at the end of September. Because there's all sorts of stuff that gets in the way of that. In 1 year, for instance, could be different, or you get emotional and you say, hey, I can't do that. I don't think that would be a wise decision. You may lower risk, pull back on the risk as far as it goes, make some allocation decisions about being in less beta type of sectors of the market. For instance, technology tends to be weaker in September, so you can make other adjustments along the way. But it is, I think, an important consideration.
And the best months, can you remind us? I know December's good.
December, January tends to be good as well. April tends to be a strong month as well. And generally speaking, really from November to April tends to be the best 6 months of the year. So that's where you tend to want to focus most of your investments, and that's the old sell in May and go away type of thing. And then once again, that's an average. But we've seen the market move higher here in August. That's an example. Now, August tends to be not one of the best months of the year either. So we can see the market doesn't always follow a seasonal trend. It just helps with the probability. And right now, the market is richly priced. And if something's going to happen, this is when it tends to happen.
Brooke, thank you. Thank you very much.
Great, thank you.
Brooke Thackray, research analyst at Global X.